Hello, everyone. Good morning, ladies and gentlemen. How are we all doing today? And trust you are doing very well out there. And in fact, it has been quite a very interesting 24 hours for us in this community. So, we are going to be going into some details in a moment. So before we start the session, let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section, as this will give me a positive feedback that we are good to go. So I would like to see some feedback, please. Let's see some comments. So I'll try to load up my chat box and let's see what we have here. Okay, so Tom 7 9129 995. Hey Carrie, good morning. Thank you very much, and I'm so glad to have you around. 728, good morning. 7009, good morning to you. Susie MB, how are you doing? Hey Femi, good morning. I see you. Thank you very much. 8603, good morning. Sunshines to you too, Carrie. All right. So I think with this positive feedbacks, I think we are good to go this morning. So on this note, I welcome you all to another promising session where we shall be focusing on my price action based technical analysis. In this session, we will thoroughly examine the financial instrument on our watch list for this week. Remember, we have the US All Spot, the US Tech 100. We also have the XAUUSD, and of course the GBPUSD. So we have four financial instruments on our watch list for this week. So we are going to be looking at this from a technical perspective. In fact, the last 24 hours, we've observed a shift in the market dynamic as the dollar dipped throughout the first day of the month of July. And in fact, we're beginning to see a continuation of that trend across all the major pairs this morning. So now we are preparing for the upcoming New York session, and I have conducted a comprehensive analysis of the current market structure to identify potential trading opportunities that we can capitalize on. So I will be sharing with you my insightful findings, accompanied by simple setups that will enable us to effectively navigate the market structure. As always, our analysis will heavily rely on trend lines, key levels, and chart patterns, which will provide us with valuable insight into the historical price movement. And without further ado, let's dive right into the business. And sorry for those who are joining us for the first time, I didn't forget you. You're highly welcome, and I'm always excited to have newcomers in the house. If you are new with us, please let me know in the comment section. Just notify yourself with one or two compliments out there, and let's see you. So what we simply do here on a daily basis is to gather as a community in anticipation of the New York session. And during this time, we will review and manage our current positions, while we also aim to position ourselves strategically for the trading session ahead of us. So this is what we do on a daily basis. So I would implore that you stay tuned in with us and continue to be part of the subsequent sessions. And with time, you will eventually be able to use the information you have gathered here to make your independent decisions on your own account. So once again, you are welcome. So with that being said here, let's dive right into the business. And as usual, you know how we do it in this community. We want to be checking on the economic calendar, as these fundamental factors, as you know, often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. So for today, July 4th, we are going to be looking at high impact events, of course, that will be affecting the currencies on our watch list. And that is we are looking at something from the US economy, the UK economy and as well the Japanese economy. So for today, Tuesday, 4th of July, we really do not have any high impact event to look out for. And in fact, I went on to further filter in the medium impact event, but nothing came up on the list. So for today, we are going to be relying on our technical skills to identify potential trading opportunity while we also manage our existing positions. So with that being said here, let's dive right into the business for today. And the first instrument on our watch list for the week, as usual, is the US All Spot. Now on the US All Spot, we have quite an interesting 24 hours here, as price action has been a little bit choppy. We had some volatility during the New York session yesterday, and this was as a result of the ISM services PMI data that came in below expectation, hereby affecting the dollar negatively, and we saw the same traction reflect on the US All chart. So we are going to be looking at how we took advantage of trading opportunities yesterday and what we are going to be looking out for today. Now, at the beginning of the week, remember we identified this range where price action was initially caught within the $70.75 level and the $70.40 level, giving us a flat channel to work with. And prior to our live session yesterday, I told us all that I already had a buy position triggered after we saw the breakout of the $70.75 level, and then added more positions at the breakout of the $71 area to give us the privilege to maximize that move. And in fact, I was able to scoop over 130 pips on that first position before this bearish momentum began. And right here, we have seen a situation where price action has dropped significantly back into that key level at the $70 area we identified to be our yardstick to guide trading activity for this week. And if you remember vividly yesterday, I told us all that there is still a chance that price could still drop to the downside. So if I zoom out a little bit and let's look at what is going on here, you will see that we have an ascending trend line that we identified at the beginning of the week. And in fact, this ascending trend line, ascending channel here emphasized the importance of buyers in this particular market. And as you can see, after connecting the series of higher highs and higher lows, we have a beautiful ascending trend line channel, which has been guiding this bullish momentum in the last couple of weeks. Now, with the situation that happened yesterday, price action dropping back into that $70 area, which happens to be our key level for the week, remember, and for the fact that buy pressure resumed around that area, I'm of the opinion that this might likely be a platform that will incite a bullish momentum going into the second half of the week. And coupled with the fact that we are anticipating the OPEX Plus seminar, which is coming up between the 5th and 6th, and there is a high chances that there will be much more cut in oil production. Of course, we all know the OPEX plan for the year, trying to raise the price artificially to at least the $80 barrel, and they are trying to do everything within their means to make this happen. And from the look of things, the market is gradually anticipating this event, and we begin to see some bullish traction in that regard. So what I did this morning while trying to dissect and decipher what our next line of action would be was to position myself just right above that $70.40 area to capture this bullish move. And this was as a result of identifying what looks more like a reversal pattern after taking into consideration the impulsive move that brought price back into the $70 area. We saw price come to the upside. Price was unable to break the previous low, hereby giving us a higher low. And you know how we do it whenever we start seeing higher lows in the market. We understand that the buyers are gradually gaining momentum at this point. So with the neckline of this potential reversal pattern situated at the $70.40 area, I had a buy position triggered at that point. Now, with the buy position triggered, I'm seeing this as a trend continuation pattern. And secondly, the fact that price action remains above the support line of this ascending channel is more of a sign that we are likely going to be going more bullish this week. And as long as price action remains above the support line, we shall feel comfortable in our buy positions. Sorry, what happened there? So we shall feel comfortable in our buy positions while we also look out for more opportunities to take advantage of this bullish move. Now let's zoom into the structure here. Now for those who are taking advantage of that opportunity at the breakout of the $70.40 level, well done to you for being on standby to have caught that move, as you will currently be running with at least a minimum of, let's say, 35-36 pips thereabout. So what we are going to be doing now, you know how we do it in this community. As soon as price action moves significantly well in our favor, we want to be moving our stop losses to secure the current buy position. And what I'm going to be suggesting here, since price action has not really moved that far and we are still within the buyer's territory, let's just have our stop losses around the entry zone, around that $70.40 area, giving room for price action to breathe and hoping that price action will continue to the upside. Now, for those who had missed out on this opportunity, well, there is no cause for alarm. We just need to be very patient and wait for new structures to mature. Now, what are we going to be looking out for from this current market structure? So like I said earlier, we had an impulsive move to the downside. Price action appeared to transition into what looks like a reversal pattern in the form of a double bottom structure. We had a breakout of the neckline, and you all know from a technical standpoint, there are still a chances that price action could still come back to retest the structure, that is the neckline, to incite another wave of bullish momentum. So we are not going to ignore the potentials of a little bit of selling opportunity coming in here to bring price back into the $70.40 area or the trend line to incite the second wave to the upside. So for those who had missed out on this opportunity, we shall hold on and see if the market will give us that privilege, that is dropping back into this area. And in fact, if we have price drop into that area, we scale down into our lower time frame where we are going to be looking out for patterns and structures that will support a bullish momentum. And this will reflect on the chart as probably a double bottom structure, head and shoulder patterns, or falling wedge, whichever reversal patterns you can think of. But one thing we want to be seeing here is the inability of sellers to gain momentum below that $70.40 area to give us a sign of joining that bullish move to the upside. So that is one scenario we are going to be taking into consideration while we wait for new structures to mature. Now, secondly, if price action does not drop into the $70.40 area, but instead continue to consolidate around this area or even find higher lows, then we are going to be getting ready to join a trend continuation pattern at the breakout retest of the resistance line of that trend continuation pattern. So it could be a flag pattern, it could be a rectangle, bullish rectangular pattern, it could be a pennant, whatever it is. If it forms around that area, well, we are going to be looking out for breakout retest to join that bullish move. So we are going to be looking out for these patterns on a much more lower time frame, let's say the 5 minutes, 10 minutes, or even the 15 minutes time frame, to look out for confirmations to join this bullish move. So I look forward to adding more positions if price action continues to break out of that $71 level that we mark here. And if it continues again, we have another level here had the $71.80 area, which happens to be the highest point price action has gotten to for this week. If for the breakout of that level, definitely will be welcoming more opportunities to maximize this move to the upside. So on the USOILSPOT for today, Tuesday, July 4th, we are holding on to a bullish bias as long as price action remains above the ascending trend line, that is the support line of the ascending channel, and of course the $70.40 level. So let's mark these levels out on our charts, as we are definitely going to be using it as a reference point to guide our trading activity for today. Now, in as much as we're looking out for buying opportunities in this market, you know how we do it in this community. we always want to ensure that we keep tabs with the potentials of the opposite movement in price action. And since we are looking at a bullish momentum here, what are the considerations we are going to be having for sellers? What are we going to see on this chart that will make us change our bias from bullish to bearish? Well, for me at this particular point in time, before I can start considering selling the US All Spot, I would want to see price action breach this support line of this ascending channel that we identified earlier. So I would want to see a breakthrough of that support line to give me a confirmation that sellers are gradually gaining momentum, and this will definitely lead to a breakdown of our key level at the $70 area. Then at this point, I will consider selling the US All Spot. But remember that we are not going to be getting too excited as soon as price breaks down the trend line, as we will still need some confirmation before jumping into a sell position. So as soon as we get the breakdown of the ascending trend line, or probably the key level at the $70 area, we shall scale down into our lower time frame, where we shall be looking out for confirmation, which would reflect on the chart as price action retesting structure, continued selling pressures, that is buyers finding it difficult to break back above the trend line. Then at this point we want to start considering selling. But from the current market structure here, I doubt if its bearish momentum will come in. But if it does come in, we want to be on standby to catch that move. So let's mark these levels out on our chart, and let's use it as a reference point to guide our trading activity for today. So these are my views on the US All Spots. If you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions in the comment section. And for those who would like to mark out these levels, you can use that time to mark out those levels while we wait out and see if there are any questions. All right, so in the absence of no questions, I want to assume that we're on the same page together. So I hope you have marked out these levels on your charts. I see comments from 4114. All right, I see you. Good morning to you. 2045. Thanks for checking in. 77574. Good morning to you too. Glad to have you around. All right, so with that being said here, and with the absence of no questions, I will be moving on to the next instrument on our watch list for the week, which is the USTech100. So on the USTech100, since the beginning of the week, the market has been very, very choppy. In fact, we have been witnessing a consolidation phase for the last 24 hours. In fact, we initially, remember at the beginning of the week, we identified a range between the 15,200 level here and the 15,170, giving us a flat channel to work with. And in fact, we saw a couple of positions triggered here, but price action did not last long in that direction before we were taken out of that position, and at worst case scenario probably break even, as you would have definitely moved your stop losses as soon as price moves significantly well in our favor. And in fact, at this point in time, it appears that the range has widened a little bit further, as we have a new support line for the week situated at the $15,150 level. Then the highest point for the week has also shifted to as well. So we want to acknowledge that level too, so that we get things in the right perspective. So we have the highest point for the week situated at the 15,230 level. So let's just mark this level out so that we have a visual clarity into what our expectations are for today. So you want to mark that level out. So that's the resistance line for the week. So we have a situation here where price action has been ranging between the 15,230 and the 15,150 since the beginning of this week. Now, with this observation here, another thing I was able to spot here after identifying this range is an ascending trend line, which of course we are going to be using to guide our trading activity for the later part of the week. And in fact, after connecting the series of higher lows here, we have a beautiful ascending trend line which emphasizes some level of buying strength in the market since the beginning, since last week Friday. And with this situation here, for the fact that price action remains above this trend line, we would have no other choice than to continue to look out for patterns and structures that will support a bullish momentum to the upside. Unless price action breaches this trend line, we are not going to be thinking of selling this particular market. Now, to help us guide this bullish move here, if we bring out our line chart, we can see we have some lower highs here, which if we connected them correctly, we have a new structure that we can also use to complement the ascending trend line to help us guide any trading activity here. So if I do some readjustment here, we should have something like this. And one interesting thing about this descending trend line that we just identified here is the fact that it also shares a confluence with the 15,200 level that we have here, which was initially our resistance line, if you remember vividly. And so with a beautiful confluence around that area, it's going to be an area where we are going to be looking out for buying opportunity if price action ever breaks out and retest that structure. So to buy the USTech100 today, I want to see a breakout, possibly a retest of that 15,200 and the descending trend line to give us an opportunity to join a bullish move to the upside. And in fact, we would have a privilege of maximizing this move as we have the 15,200 level, 230 level as an area to add more position to our existing trade. And if price action goes on to break out of the 15,250 level, we definitely want to be adding more position to our existing trade. So on the USTech100, as long as price remains above this trend line, this trend line here, we feel comfortable buying while we look out for more opportunities to maximize that move with those levels we identified there. So you would want to mark these levels out on your charts, and let's use it as a reference point to guide our trading activity. And one thing here is you can as well have a buy stop order above the 15,200 level if you can afford a stop loss of about 35 pips, because I want my stop loss to be a little bit more lower than the 15,170 and the ascending trend line here, so that we can give room for price action to breathe here. So let's have a stop loss around that area and let's see how far this bullish momentum will go. However, in as much as we're looking out for bullish expectation in this particular market, we cannot consider the potentials of sellers too as well. And one thing we have noticed here since Friday of last week trading session, remember last week we saw this impulsive bullish leg which brought price into the current structure it is right now. And one significant pattern you will notice here is that as soon as price got into that zone around the 15,200 area, we have been seeing some strong selling niche around that area, negating all attempt by the buyers to break through the zone. And because of the situation here, it is we need to consider the sellers too as well. We might likely see persistent selling pressure leading into a situation where price action will break through that ascending trend line to give us an opportunity to sell. And looking at the trend line here, you will see that it also shares a confluence with the 15,170 level, which if breakdown of both of the structure happens, it will be a clear sign that sellers might likely going to be coming in. And if this happens, remember we are not getting too excited. As soon as we have the breakdown of the structure, we shall scale down into a much more lower time frame, like the 10 minutes, 5 minutes, or 15 minutes time frame, to look out for signs that sellers are gradually gaining momentum. And this would reflect on the chart as a retest of structure. It could come to retest the 15,170 or the ascending trend line, which would have been broken at that time, or it could even go as far as this descending trend line. But the most important pattern we want to see here is continued selling pressure, reversal patterns around this area to give us a confirmation of joining a bearish move to the downside. And if we sell, we can have a sell stop order below the 15,150 to maximize the trend continuation to the downside. So this is how we are going to be capitalizing on the opportunity to trade the USTech100 today. So you want to be marking these levels out on your charts, and let's use it as a reference point to guide our trading activity. Now, talking about the bearish expectations here that we said we are going to be looking at if price action breaks down the ascending trend line and the 15,170, I want us to take note that the breakdown of that structure is going to be considered a counter trend opportunity. And the reason why we are going to be calling it a counter trend opportunity is because of this impulsive move we have been witnessing here since last week's trading session. And if this happens, I'm of the opinion that it might be a retracement of that impulsive move where price action will probably come back into that our key level for the week, which is situated at the $15,000 mark. And depending on how price action reacts to this level will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So if we have a breakdown of the structure, then we shall consider selling or adding more position to our existing trade. But if we begin to see buy pressure resume above this level, then we would have no other choice than to start looking out for more opportunities to buy the USTech100. So let's see how this will play out. But things are looking very bearish at this point, as we have been noticing continued selling pressure around here as buyers struggle to push price to find new highs in this particular market. But let's see how price action will play out. Mark these levels out on your chart and let's use it to guide our trading activity for today. So if you have any questions regarding what I just explained here, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, and you can as well use that time to mark out these levels on your chart. So let me just zoom this out a little bit so that we can see things clearly. So you mark these levels out on your charts, and you can as well screenshot the screen so that you can use it as a reference point. So in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving on to the next instrument for today, which is the GBPUSD. Well, on the GBPUSD, we have been witnessing some chopper situations, though we had a sell position triggered at the beginning of the week, which actually moved in our favor for about 30 to 40 pips before we were taking out at a worst case scenario of break even. And that is subject to where you had moved your stop loss after citing this impulsive move to the downside. And remember, during our live session yesterday, we acknowledged a zone here between the 1.26650 area and the 1.26202 250 area as an area to look out for buying opportunity. So I said here yesterday that this bearish momentum might likely come into the zone, and one thing we saw here was that as soon as price got into that 50% retracement of the previous impulsive move we saw last week, we begin to see some buy traction resume around that area. In fact, I missed out on that opportunity because I wasn't sure that this bullish momentum will continue to the upside, because I was thinking that price will still come back and probably retest the structure to incite another wave to the downside. But I was wrong here, as we saw price action continue to find higher lows. But it's not too late to join any bullish momentum here. But for those who are taking advantage of that opportunity at that point, well done to you for catching up on that move. Personally, I missed out, and I'm looking forward to entries at another particular juncture, which I will be sharing with you in a moment. So while I was trying to dissect the current market structure on the 1 hour time frame to decide what our next line of action would be for today, I was able to come up with a simple setup here on the 1 hour time frame, which I will be sharing with you in a moment. But before we go into the details on that one, I would like us to take a quick review of the higher time frame so that we can have an holistic perspective into what is going on in this particular market. And when I come back down here, you will be able to understand and be on the same page with me. So right here on the 4 hours time frame, so this was what we saw at the beginning of this week. And what we did here was to take into consideration the activity of price action since the beginning of the month of June. And what we saw here was the fact that price action has been bullish. And in fact, we had a couple of trend lines here to further emphasize the strength of the buyers at this market. Now, something interesting happened on the second half of last week. I think from Thursday stroke Friday of last week, we saw how the 1.2600 level became a platform for the strong, impulsive, bullish move that we witnessed here. So we saw that as soon as price action tested the 1.26 level, we saw buy pressure resume along that area to incite that impulsive move. And if we go to as far back as the second week of the month of June, you would notice how this level had been a major determinant of price action. At this point in time, I think on the 12th of June, it was more of selling at that point before we witnessed a breakout retest of the structure on the 13th of June. And since then, price has been trading above that 1.26 level, and not until last week's trading session that we saw price action drop back into that zone. And as soon as it got into that area, we started seeing buy pressure emerge from that zone to give us a sign that this might likely be a very strong demand zone for another wave of bullish momentum. So with this information we gathered here on Monday, we looked at the possibility of this whole structure here turning into a reversal pattern, this whole structure here. So after considering the impulsive move that brought price into that level, we saw some choppy situation, and then we identified a neckline for that reversal pattern situated along the 1.26500 area, where we said a breakout retest will welcome buying opportunity. And since the breakout has happened, we have witnessed some consolidation phase at the peak here around the 1.2700 area, where I said at the beginning of the week that we might likely see price drop into the neckline to incite the second wave of that bullish momentum. So this is what we were looking at the beginning of the week, and that was the reason why I avoided that buy opportunity around that area. And since that time, we can see price has been finding higher lows. So what this simply means here is that price might not come back into the structure, that is the 1.265, and might continue to find higher highs. And this situation we have here could turn out to be a trend continuation pattern that will incite the second wave of this bullish move. And one interesting thing about this whole consolidation phase here is the fact that it also shares a confluence with this descending trend line that you have here that has been supporting this bearish momentum in the last couple of weeks in this market. So what I'm going to be looking out for to buy or to join a trend continuation at this point is to see price action break out of this descending trend line. And one more thing that makes it interesting is this 1.270 level, a very strong psychological area considering the round figure of that price, sharing a confluence with that level. And remember what I said at the beginning of the week, that the 1.27 area is going to be serving as our key level for the week. How you know how we use our key level in this community? If price action breaks out of the key level, definitely we want to be looking out for structures and patterns that will support a move to the upside. But if selling pressure continues below the 1.27, which is our key level here, then we would have no other choice than to look out for bearish opportunities in this market, probably bringing price back into the 1.265 to incite another wave or even drop to the second ascending trend line. So these are the things we are going to be looking at, and for us to have a better perspective into what is going on here, we would need to scale down into the lower time frame to see how participants in this market are reacting or relating to that key level at the 1.2700 area. So with this information we have on the 4 hours time frame, I think you now have a better idea of what is going on from a long-term perspective, and when we scale down into the 1 hour time frame, you'll begin to see things more clearly. Now on the 1 hour time frame, since the beginning of the week here, remember we had a range. Hold on a second, this is the key level here. So remember we had a range between the 1.27070 and the 1.26880 level, and in fact price action is back into that range to further emphasize the importance of this zone, and also gives us an insight into the level of indecision in this particular market. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently for structures to mature before joining any potential move. And what we are going to be looking out for here is either price action breaks down the support line of the channel to give us an opportunity to sell, or price action break out of the resistance line of the channel to give us an opportunity to buy. So with the situation here and the fact that price action still remains above this ascending trend line, I'm of the opinion that buying above the 1.27070 is an area to look out for buying opportunity. So for those who are already in the buy position, who are profitable already, you can leverage on the profit you had made so far on the GBPUSD to test waters around this area, and by doing that you have a buy stop order above the 1.2707 to capitalize on this trend continuation to the upside. However, there are ways that we can also take advantage of this. So once a breakout happens, you can scale down to the lower time frame, look out for retest of structure, confirmation that buyers are getting stronger above that area and that sellers are finding it difficult to drop back below the key level at the 1.27 to give us a confirmation of joining that bullish move to the upside. So personally, I have a buy stop order above that area, and then looking forward to buying opportunities there. And let your stop loss be somewhere below the ascending trend line or around that support line of the flat channel at the 1.26880 zone to secure your portfolio. So that will be dovetailing to about between 18 to 25 pips thereabout, depending on where your entry is. So let's use that as our stop loss, and let's continue to monitor price action to the upside. So on the GBPUSD, and considering what has happened last week, we shall be holding on to a bullish bias in this market. However, in as much as we're looking out for buying opportunity, you know how we do it in this community. We always ensure that we keep tabs with the opposite direction too as well, so that what if the opposite happens, we want to also be on standby to catch that move. Now, with the situation we have here and the fact that we have an ascending trend line that will be guiding our trading activity for today. So a breach of this trend line will be that signal we are looking for to make us change our bias from bullish to bearish. Now, once the breakdown happens, you know how we do it. We scale down to the lower time frame, then look out for signs that buyers are finding it difficult to climb back above the trend line, which will reflect on the chart as a retest of structure, continued selling pressure. Then we could sell, then have a sell stop order below the 1.268800 level to trigger another sell off in this market. So this is how we are going to be selling the GBPUSD. So we have a trend line here. Unless the trend line is broken to the downside, we shall not consider selling this instrument. So these are my views here on the GBPUSD for today. It's a very simple setup. We have a range and of course trend line that we are going to be using to guide this trading activity for today. So if you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am willing and ready to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions, while you also take your time to mark out these levels as you want to be using them to guide your trading activity today. Hello, Gatita. How are you? Thank you for checking in. Good morning to you and happy new month to you. All right. So in the absence of no questions, I want to assume that we're on the same page here. So I shall be moving into the next instrument on our watch list, and I think this was the last instrument we treated yesterday, and that is the XAUUSD. And in fact, we have been very profitable on this commodity since the beginning of this week, and price action has been finding higher highs here. And for those who are taking advantage of this opportunity, well done to you for being on standby to have caught this move. So yesterday we anticipated a breakout of the $1,914.50 level that was around this area. So we had a buy stop order above that structure, remember, and a couple of hours into the New York session we had our buy position triggered, and in fact price action moved over. How many pips was there? Over 150 pips on that first position. And remember, we also identified this level at the $1,920.50 level to add more position. As you can see, we saw the breakout retest of that structure, and since then price action has been moving on to the upside. So on this single one, we've had over 200 pips here. Well done to everyone who are taking advantage of this opportunity. Now, with the situation we have now going into the New York session, what is going to be our plans? Well, first of all, for those who still have a buy position running at this point, you want to be moving your stop losses to secure the current buy position right now, as you don't want anything of sudden, probably a pullback, to take you out of this position in a loss. So the most appropriate area, I think, at this juncture on the market to move our stop losses to is anywhere just right around or below the 1,925 level to seek to protect our position against any sudden pullback. And one of the reasons why we are going to be placing our stop losses around that area is simply because of this new trend line I was able to spot this morning while trying to decipher what our next line of action would be on the XAUUSD. Now, if you look at the structure closely, since the beginning of this week, that is yesterday morning, we saw the initial support line here at the $1,914.50 level, and then we had a higher low here yesterday morning. Okay, this morning we saw a higher low here. So as a result of this, I connected a series of higher lows to give me a trend line to work with. So we now have a ascending trend line right now that we are going to be using to guide our trading activity for today. And what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in a buy position while we also look out for more opportunities to buy. Now, with the situation here, Price action is currently trading along or around the 1,930 level, a very strong psychological area considering the round figure of that price. And at this point in time, if you look at what happened here again yesterday during the New York session, we saw that as soon as price action came into that 1,930, we begin to see selling pressure resume around that area. Now the price action is back into that zone, you would agree with me that we are at a critical point in the market right now, hence the need for us to have moved our stop losses to secure the current position. And one thing that we can come up with from this current market structure is that sellers are present around the $1,930 level. So as long as buyers continue to struggle around this area, it might be a clear sign that sellers will come in at any point in time. So I will be sharing with you how we are going to be looking out for selling opportunity on the XAUUSD. But let's first of all talk about the bullish expectations here. And for the fact that price still remains above that trend line we identified, we still look out for buying opportunities in this market. And one thing I also want to let you know that is we could have some selling pressure resume, bringing price back into the 1,925, which also shares a confluence with that ascending trend line, where the appearance of buy pressure above the structure could incite a trend continuation to the upside. So we want to keep that in mind. So even if price drops here, we're not jumping into a sell position yet, as there is still a chance price could come into the 1,925, which shares a confluence with the ascending trend line, to respect it one more time to push price to the upside. So because of that, we are not going to be selling at this particular point in time, but wait for due confirmation to happen. Now let's talk about the buy expectations here. So I'm still looking forward to more opportunities. So if I have a breakout of the 1,930 to the upside, then this will be a good sign that price action has taken out the sellers at this juncture. Then I want to see some confirmations. So as soon as we have a breakout of that 1,930, we'll scale down to our lower time frame to look out for retest of structure to join the bullish move. And if price action goes on to break out of the 1,933, we look out for more opportunities to maximize this move. So look at what we have for buy expectations here, above the 1,930, above the 1,933, and remember I said something about the 1,925 if price drops into this area and we begin to see buy pressure above that structure. Now, in as much as we're looking out for bullish expectations here, we cannot ignore the potentials of sellers too. And considering the fact that we have seen signs of selling pressure around the 1,930 during the New York session yesterday, and we are gradually approaching the New York session, and almost the same time we are beginning to see some selling pressure around that area. So if the sell pressure here persists and leading into a situation where price drops to the downside, I want to see a breach of this ascending trend line to start considering selling the XAUUSD. And one thing about this breakdown of the trend line is that it would have also broken down the 1,925. So you can see how important this confluence is in helping us to guide at the direction of price action if price drops below the 1,930. So like I said earlier, if price gets into the structure and we begin to see buy pressure, price might likely continue to the upside. But if we do see a breakdown of the 1,925, then at this point we want to start considering selling the XAUUSD. Now, if a breakdown happens, you know how we do it. We scale down into our lower time frame, 15 minutes, 5 minutes, or even 10 minutes time frame to look out for confirmations that buyers are finding it difficult to climb back above the trend line. And this would reflect on the chart as continued selling pressure below the trend line or the 1,925 to incite a sell-off in this market. So we want to be joining the bearish move when we identify continued selling pressure on our lower time frame. Then we could maximize the potential of this bearish move if price action goes on to break down, retest the $1,920.50 level to capitalize on that potential move to the downside. So this is what I'm going to be looking at on the XAUUSD for today. So you want to be marking these levels out on your chart. So the important structures we have here is one, the ascending trend line, very, very important, as this will determine if we are going to be holding on to a bullish bias or getting ready to sell. And the next levels you want to be identifying here is the 1925, where the breakdown of the 1925 retest of structure will be confirming an opportunity to sell. Then the 1920 $0.50 level, where we shall be looking out for more opportunities to maximize the bearish move to the downside if that level is broken again. However, for buying opportunity here, we have the 1930 to break out retest before joining, and then we also have the 1933 level. So this is what we are going to be using to guide our trading activity for today, and these are my views here. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I call it a day. Should I call it a day or take one more instrument so that we can utilize the remaining time frame? All right, let's see what happens. Any questions? All right, so in the absence of no questions, I want to assume that we are on the same page. So on that note, I will just call it a day on the XAUUSD. So in order to maximize the remaining minutes we have left, let's run through the USDJPY, which was actually one of the instruments I planned to share with us in this community for the week, but was unfortunately not able to do so due to the time we had left yesterday. So let me quickly run through the USDJPY to complement what we have on our watch list for this week. So here we are on the USDJPY, and in fact since the beginning of the week we have been in a very, very volatile market, and the market has been a choppy situation too as well, especially after the manufacturing PMI index that came in yesterday. And one more thing about this market is that we are at a critical point, which is the 145.00 level. So I would like to scale up into the higher time frame to share with you how important this current structure is in determining what our next line of action will be. So that is the 145.00 area. So we are on the daily time frame right now, and the most important level here to reckon with is the 145.00 level. And if we go to as far back as September, October and November last year, you will see how that same level had been a major determinant of price action. And looking at it from the fundamental perspective, we had last week Friday the Minister of Finance for Japan, that is Suzuki, made mention of the possibility of the Bank of Japan to intervene in this market. And he also gave a warning, let me say, on Friday to bears in the market that they should stop shorting the yen, as if this persists that they are likely going to intervene, and when bank intervenes like that, they are going to be buying a whole huge volume of the yen. And if that's going to happen, it's going to crash price to the downside. And that was exactly what happened last year in the month of, I think, October, November last year. The Bank of Japan intervened the first time in 24 years in the market when they couldn't take it anymore as the yen continued to drop in value. And we saw after the intervention there, we saw this engulfing bearish candle slicing through the 145.00 level to the downside. And since then, price action has remained below this level, which shows that the intervention actually worked. Now, with the situation here, price action gradually since the beginning of this year has gradually approached back into the 145.00 level. And as you can see, in the last couple of days now, I think last 3 days or so, or 4 days, you can see price action is currently around that 145.00 level. And one thing we noticed around that area is that price action has been very consolidating around that level, which further emphasized the level of indecision in this market. And this could be connected to the market participant wary of the potential of the Bank of Japan's intervention at this juncture, which might cause a strong bearish move to the downside. So as a result of this, this market is currently risk averse as participants are looking forward to a catalyst that will give an insight into what the next line of action will be. So in order to have a better perspective of what is going on around this 145.00 area, we shall be scaling down into the 1 hour time frame to see how participants in the market has been reacting to this level. Now, when we scale down into the 1 hour time frame, we begin to see things clearly. And one thing you would observe here since the beginning of the week is the fact that price action has been range bound between that area. So in this case scenario, I have it at a 144.900. We can also use the 145.00 area. So we can see price has been ranging between that level and the key level for the week at the 144.200, now giving us a sign that there is an indecision in the market. And whenever we have this kind of range, you know how we do it. We want to remain patient, waiting for new structures to mature to give us a signal of where price action will be going. And one of the things we normally look out for whenever we have this kind of flat channel is to wait patiently for either a breakout of the resistant line at the 144.900 to buy the USDJPY, or we wait for price action to drop below the support line at the 144.200 to sell. Now, if we look at where price action was this morning when I was trying to decipher what could happen from the structure, we saw price around this area. And if we compare the distance between where price is and the resistance line here is about 23 pips, and from that point to the support line here is about 28 pips. And I was thinking, how can I join any opportunity in this market even before the breakout or breakdown of the channel happens, so that I can maximize the potential of any of this move? So in order to do this, what I did first of all was to connect a series of higher lows, which has been happening since Friday of last week's trading session. So I had an ascending trend line to work with, then also connected a series of lower highs since the beginning of this week to have a descending trend line to work with. Now we have something that looks like a pennant, and from a technical standpoint, a breakout or breakdown of this pennant will be a sign, would give us a clue of where price action is likely going to go. And during the early hours of today, we saw the breakdown of the support line of this range, which made me to sell initially. And in fact, price action is running at my break-even zone at this point. But I'm becoming worried about this whole structure after noticing the buy pressure resuming around that 144.350 area, which has been peculiar in the last 4 hours now. And it's giving me a clue that buyers might likely come in to do a final breakout of this descending trend line to climb back above that bullish trend line to inside a wave to the upside. So I'm thinking this might likely be a possibility at this point. So you can see we're at a very critical point in the market where we need to be very careful and remain balanced to capture any move even before the breakdown or breakout of this range happens. So with this situation here, how do we buy what do we see on this chart to buy the USDJPY? Well, for me to buy the USDJPY at this juncture, I would rather see price break out of this as descending trend line, first of all, to give me a signal of what might likely happen. And as soon as we have a breakout of that descending trend line, we shall scale down into our lower time frame to look out for confirmation such as a retest of structure respecting the ascending trend line to inside another wave of bullish momentum. And remember, we have a buy stop order above the 144.690 to add more position to our existing trade. And if this move continues to the upside, we have another level at the 144.900 to maximize the potential of this move if price action breaks out and retest that level. So that is how I'm going to be buying the USDJPY for today. However, selling at this juncture on the market, since price is still below this ascending trend line, I'm of the opinion that seller still has a chance of pushing price to the downside. So even though we have been noticing some buy pressure here, we might likely see a situation where price comes back into the zone, continued selling pressure around this area to incite a wave to the downside. And look at this confluence here. Look at the descending trend line, as you can see, and look at the ascending trend line here. There is a beautiful confluence here where we could see some selling pressure resume there to push price to the downside. And if we do have a breakout at that point, then we will start considering buying. So this is how I'm going to be selling for today. So as long as price remain here, I will be selling below the 144.450, then maximize more position at the breakdown of our key level for the week around this particular zone here. So breakdown retest will definitely welcome more opportunities in this particular market. So these are my views here on the USDJPY. I hope I was able to make myself clear. And if you have any questions regarding what I just explained, feel free to let me know in the comment section, as I will be taking some time out to see if there are any questions. And you can as well use this time to mark out these levels on your chart so that you can use them as reference point during the New York session today. So 10-15 seconds, then we call it a day after if there are no questions. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I shall be rounding off as we get prepared for the New York session. So I see your comment, Genry. Hello to you. How are you doing this morning? Jose94, good morning to you. Glad to have you around. 5640, good morning to you. Thank you for checking in. So I think on this note, we'll just call it a day. It has been a wonderful moment. And in fact, I am grateful to be alive, to be with you guys today. So we were able to treat, I think, 5 financial instruments here. The USOILSPOT, the USTech100, the GBPUSD, the XAUUSD, and of course, we added one more to our list today, and that is the USDJPY. So we look forward to a better time during the New York session today. So let's keep in mind and let's ensure that we have all our positions, as we've said here, to be locked in. All those positions running. Let's move our stop losses to secure some position. Let's secure some money and wait and see how price action will be reacting with the current market structures we've identified here today. So, for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed here. And trust me, with time, the more time you spend with us, you get to understand how this works, and you will eventually be able to use the information you have gathered here to make your independent decisions on your own account. I look forward to seeing you same time tomorrow as usual, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these instruments have been doing, while we also get ready strategically for the New York session tomorrow. Do have a wonderful and beautiful evening, everyone. Bye bye.